You're watching Silver News Daily. Subscribe for more.
Did you know that amidst the current economic turmoil, silver has emerged as the only safe haven investment? In today's video, we'll dive deep into why silver is holding strong and why it might be the safest bet for your investments right now. All right, I know this sounds too good to be true, but before you roll your eyes, let me explain why experts are saying this. First, let's look at the recent surge in silver's industrial demand.
Overly transparent in what they're doing, because this is, every man for themselves, if you will. So, yeah, I think that's exactly why China's going around the world buying as many silver mines as they can, because it's disappearing and it's needed, and its value has been masked by the Western suppression. And that Western suppression has given all of these countries who are now wealthy and sophisticated — they were third world 25 years ago. Now they're wealthy, sophisticated, and coordinated and pissed off. And they are doing things methodically and using the suppression of the Western paper markets, the stupidity of the Western markets, to drain the exchanges of all the world's commodities and to buy them at subsidized prices. And once there's no bid and the Western exchanges are exposed for what they are — fraudulent, rehypothecated Ponzi schemes — then you will see the Shanghai Metals Exchange, the Dubai Metals Exchange, the Moscow Metals Exchange, all of these exchanges in the East, the South, well, they will take over for the COMEX, the fraudulent and disgraced and discredited fraudulent COMEX and LBMA. And, it's not just precious metals. Look, the Chinese bought the LME, the London Metals Exchange, all the base metals, whereby those metals are mined and they find silver. Well, they own that. And, they're going around the world in the Belt Road, in the BRICS, buying all of these commodities and mining them in their own countries. They are the number 2 largest producer of silver in the world, the largest producer of gold in the world. So yeah, it's real. And I think the Western suppression of price and the rhetoric, the antithesis, if you will, of Wall Street, this Wall Street rhetoric, which shuns gold and silver. Gold has outperformed the S&P 500 in every asset class on the planet, with the exception of Bitcoin, since 2000. It's averaged 9.9% per year compounding. It's beat the S&P 500, even with dividends reinvested. That amounts to about 9.5%. Gold's at 9.9, and yet no one notices it and discredits it. It's the tortoise, not the hare, and it has no counterparty liability. Read The Great Taking by David Rogers Webb, and you'll understand what counterparty liability is. Or just look at what we've done to the Russians by stealing their $5 billion in treasuries. It's a default. And so, yeah, Jesse, silver is the most undervalued asset on the planet. It is the opportunity of a generation. And I don't say that lightly. So the price is the greatest tool of misdirection. The fundamentals, if you are able to do the digging and spend the time researching, not going to find it.
In 2023, silver's industrial demand surged by 11%, reaching an unprecedented record of 654.4 million ounces. This remarkable increase was driven largely by its critical role in the burgeoning green economy, which has seen explosive growth. Specifically, the use of silver in photovoltaic (PV) applications skyrocketed by 64%, exceeding all market expectations. This surge is just the tip of the iceberg when it comes to silver's industrial applications. Photovoltaics, or solar panels, are a key component in the global push towards renewable energy. As nations around the world strive to meet ambitious climate goals, the demand for solar energy has risen sharply. Silver, known for its superior conductive properties, is a vital material in the manufacturing of efficient solar panels. In fact, the silver used in PV applications alone hit a new high of 193.5 million ounces in 2023. But it's not just solar energy driving the demand. Silver is also indispensable in the electrical and electronics sectors. These industries saw a 20% growth, with silver usage climbing to 445.1 million ounces. This growth can be attributed to the increasing reliance on silver in various technologies, from smartphones and computers to electric vehicles and power grid infrastructure. The rapid pace of technological advancement means that silver's role in these sectors is only set to expand further. Moreover, silver's demand is soaring in power grid construction and automotive electrification. As countries upgrade their power grids to handle the influx of renewable energy sources and shift towards electric vehicles, the need for silver is becoming more pronounced. This metal is crucial in the production of components that ensure the reliability and efficiency of these systems. To put this in perspective, consider the case of China, where industrial demand for silver increased by 44% to 261.2 million ounces in 2023. This surge is largely due to green applications, particularly in PV, as China continues to lead the world in solar panel production and installation. China's rapid expansion in this field accounted for a staggering 90% of global panel shipments in 2022. Meanwhile, demand in the United States remained steady at 128.1 million ounces, and Japan's offtake held firm, underscoring the global reliance on silver for industrial purposes. In addition to these sectors, silver's demand for ethylene oxide, catalysts remained strong, driven by capacity expansions. Catalysts are essential in the production of various chemicals and materials, including antifreeze and polyester. Similarly, brazing alloys, which saw a 2% increase in mainstream end uses like automotive, aerospace, and shipbuilding, further highlight silver's diverse industrial applications. This unprecedented industrial demand is a key reason why silver is standing out as a safe haven asset in today's volatile market. The consistent and growing need for silver across multiple industries creates a strong foundation for its value.
The Silver Institute omits completely and totally military demand. So we have a situation where, ask yourself, why would 8 Western commercial banks suppress the price the way that they do? The largest suppression, the largest concentrated short position in any commodity traded is in silver. The largest. Silver, we are told, is used in military, but they conveniently stopped talking about that and stripped it out of the supply-demand fundamentals. The military-industrial complex is pretty damn powerful, maybe more powerful than the present, probably so, probably pulling the strings, the people up there. Do you think they want silver to build all of the missiles that they are selling all around the world and or to the U.S. or to the rest of the world? Do you think they need it? And if silver were really known to be so integral to military applications, do you think it would be as cheap as it is? Do you think there's any coincidence that India has bought, literally going on, if you add what they bought from United Arab Emirates and what they bought from the West, from what they told us, you're getting close to a billion ounces of silver in the last 3 or 4 years. China is the largest producer of silver. You don't ever hear them talking about it, but they are, number 2. Mexico's number 1, China number 2. Silver is the trade of a generation. It is the value of a generation. And if it weren't for these Western banks that are holding down the price, it would go parabolic. Now, what's different? What is different right now is that you, for the very first time, have sophisticated, coordinated, and wealthy governments acting maybe through, by proxy, through sovereign wealth funds and bullion banks that are draining the exchanges of the LBMA and the COMEX and backdooring out of the ETFs and even the Shanghai Metals Exchange. And they are loading up on gold and silver. But in terms of silver, this is how they win. They look at the brain-dead suppression of the West to achieve an illusion that silver is cheap so they can continue to fund the beast of the military-industrial complex and the hundreds and hundreds and hundreds of wars that we've been involved in, or they have been involved in terms of supplying munitions for the last several years. It's the key to it all. Why would it be omitted? Why don't they talk about it? Why are these banks as dumb as a mud wall in a rainstorm suppressing silver at a time when all of these other governments are buying it? What is different now than in all of my career is that over the last few years, you have countries and sovereign wealth funds standing for delivery. They never did that before. 1% or less stood for delivery. Now they all do. This is how they win. Thank you very much. I don't care about positive real yield. I don't care about the strong dollar. I don't care about any of these relationships. Just give me the silver. And if you look at the drawdown in the LBMA silver vault, it's like a ski hill straight down, right? And the same thing is true, only slower, on COMEX, and the same thing is true right now on the Shanghai Metals Exchange. So these countries are buying Western gold and silver, having it delivered to China, and offloading it off of the exchanges. There is a contract that most people don't know about that was written by the CME Group in 2015 that allows for COMEX futures to be delivered in exchange.
Now that we've established the surging industrial demand for silver, let's delve into the other side of the equation, supply. For the third consecutive year, silver demand has outpaced supply, leading to a significant structural deficit. In 2023 alone, this deficit reached a staggering 184.3 million ounces. This persistent imbalance between supply and demand is a crucial factor in silver's current and future valuation. The concept of supply and demand is fundamental to understanding market dynamics. When demand consistently exceeds supply, prices tend to rise. This is precisely what we are witnessing in the silver market. The persistent deficit indicates that the available supply of silver is not sufficient to meet the growing demand from various industrial sectors, as well as from investors seeking a safe haven. One of the main reasons for the supply shortfall is the decline in global silver mine production. In 2023, global silver mine production fell by 1% to 830.5 million ounces. Several factors contributed to this decline, including lower ore grades and the temporary suspension of operations at major mines. For instance, Mexico, the world's largest silver producer, experienced a 5% reduction in output, largely due to a 4-month labor strike at Newmont's Penasquito mine. Similar declines were observed in Argentina, Australia, and Russia, where lower ore grades and mine closures negatively impacted production. Despite these challenges, some countries managed to increase their silver output. Chile, for example, boosted its production by 10.1 million ounces and Bolivia by 3.8 million ounces. However, these increases were not sufficient to offset the overall decline in global production. In addition to mining, silver recycling plays a significant role in the supply chain, accounting for 18% of total supply. In 2023, silver recycling grew by 1% to 178.6 million ounces, driven primarily by the industrial sector. The recycling of ethylene oxide, catalysts, contributed notably to this increase. However, even with the recycling efforts, the supply of silver remains constrained. The outlook for 2024 suggests a continuation of these trends. Total silver demand is expected to grow by 2%, with industrial fabrication projected to reach an all-time high of 9%, driven by a 20% gain in the PV market and strong demand from other industries. On the supply side, global silver mine production is expected to decrease by another 1%, leading to a projected market deficit of 215.3 million ounces. This would be the second largest market deficit in over 2 decades. This persistent supply and demand imbalance underscores silver's potential as a stable investment. The structural deficit indicates that silver's value is underpinned by robust demand that is not being met by current supply levels. As industries continue to rely on silver for technological advancements and as a hedge against economic uncertainties, this precious metal is likely to maintain its strength in the market.
They will revalue gold, and by proxy, they will revalue silver. And I think it's right. To some degree, silver is being revalued slowly in China. They've already got it $4 an ounce higher than in the West to arbitrage whatever isn't nailed down. That's why they're buying gold mines, silver mines, oil refineries, all of these commodities they're buying because they're critical. And all of the deals they're striking on the Belt Road, which amounts to 75% of human population already, 50% of global GDP. all of the countries on there are resource rich and underdeveloped. Look at the countries that they are inviting into BRICS. They're all massively resource rich, and most of them underdeveloped or have very key shipping lanes or trade routes within their borders or around their countries in the shipping lanes of the oceans. Yeah, it's huge. And look at Peru. They're part of the Belt Road, the third largest producer of silver in the world. Mexico said they're interested in joining BRICS. They haven't done anything about it. The first largest. Number two is China. Jim Willey, a guy who I put a lot of faith in, although his takes are sometimes very controversial, but often very brilliant and oftentimes very much before anyone else, says that they are trying to put together, China is a OPEC-style cartel of silver producers around the globe. So, yes, these countries understand that silver is depleting in nature. To his point, is mostly found in byproduct metal, mining, meaning the companies that mine it altogether can't find it.
Let's now dive into one of the most exciting aspects of silver's growing demand, its pivotal role in green technologies. As the world shifts towards a greener and more sustainable future, silver has become indispensable in several key applications that drive this transition. One of the most significant areas where silver is making a mark is in the production of solar panels, or photovoltaics PV. Silver's excellent electrical conductivity and reflectivity make it an ideal material for solar cells. In 2023, the use of silver in PV applications soared by an astounding 64%, reaching 193.5 million ounces. This surge is a direct result of the global push for renewable energy sources, with many countries setting ambitious targets to reduce their carbon footprints. China, in particular, has been a major player in this green revolution. In 2023, Chinese industrial demand for silver increased by 44% to 261.2 million ounces, largely driven by applications in PV. China's rapid expansion in solar energy accounted for an impressive 90% of global panel shipments in 2022. The country's commitment to renewable energy has led to a massive increase in the production and installation of solar panels, further boosting the demand for silver. But the story doesn't end with solar panels. Silver is also critical in other green technologies, such as electric vehicles, EVs, and power grid construction. As the automotive industry shifts towards electrification, silver's role becomes even more crucial. Electric vehicles rely on silver for various components, including electrical contacts and conductors. The transition to EV is accelerating, with many countries planning to phase out internal combustion engines in favor of cleaner alternatives. This shift is expected to drive significant increases in silver demand. Moreover, upgrading power grids to handle renewable energy sources also requires substantial amounts of silver. Modern power grids need to be more efficient and capable of integrating various renewable energy inputs, and silver plays a key role in achieving this. Its superior conductive properties make it essential for ensuring the reliability and efficiency of these upgraded systems. The demand for silver in green technologies is not just a passing trend. It represents a fundamental shift in how the world approaches energy and sustainability. As nations continue to invest heavily in renewable energy and green technologies, the demand for silver is likely to remain strong and even increase. Consider the projections for the coming years. Industrial silver demand is expected to rise by 8% to a record 632 million ounces in 2024, driven largely by the ongoing expansion in green technologies. Research suggests that by 2050, solar panel production alone could consume approximately 85-98% of the current global silver reserves. This highlights the critical importance of silver in the future of sustainable energy. Furthermore, silver's applications in other emerging technologies such as 5G networks, consumer electronics, and healthcare are also expanding. These industries rely on silver's unique properties to develop advanced technologies that meet the growing demands of the modern world. The integration of silver into these green and advanced technologies underscores its value as a safe haven investment. As industries continue to evolve and prioritize sustainability, silver's role becomes even more pronounced. Its consistent demand across these critical sectors provides a solid foundation for its value, making it a reliable asset in uncertain economic times.
They have available. And just recently, India's silver imports from the United Arab Emirates went from $2.2 million between January and April 2023. That's it. That's all the import was, 2.2 million, to 1.44 billion over the same period in 2024. That's a 654-fold increase in 1 year because they are able to import from the UAE without the high tariffs. Silver is being accumulated by countries. China, as I mentioned, is the second largest producer in the world. They're just not talking about it because gold is the only other tier one. And to think these countries want to be upfront about what they're doing in a strategic, critical asset like this is stupid. How about the U.S.? We haven't updated the world to, or even showed the world or audited for the United States benefit, our own people, our own gold that's supposedly held at Fort Knox. These countries are not going to be transparent about what they're doing. But I assure you, India being the only one who's relatively transparent, these countries are buying the hell out of silver too. And this is why you're seeing all of the drawdowns on all of the world's exchanges, which is a very dangerous game to be playing if you are a Western bullion bank, because for the first time, like that company that I was mentioning, that it's hard to pronounce its name, Shanghai or whatever. I mean, that is the Chinese government, and they are standing for delivery, and they are every bit as powerful, if you will, as the bullion banks that are borrowing from the Fed at lower rates than the hedge funds, who typically are on the other side of these trades, borrow from the market and have much deeper pocketbooks. Now they have a very formidable.
Building on silver's vital role in green technologies, let's delve into how broader economic indicators are aligning to favor silver as a safe haven investment. Historically, precious metals like silver have performed exceptionally well during periods of economic uncertainty, and current trends suggest that silver is poised to continue this pattern. First, let's talk about the global economic health. During times of economic growth, investors often flock to stocks and other high-risk assets, but in times of economic downturn, the trend shifts dramatically. Precious metals, particularly silver, are viewed as safe haven assets. They tend to retain their value and purchasing power better than paper currency and other financial instruments. With the current economic volatility, many investors are turning to silver to hedge against potential losses in other markets. One of the key economic indicators to watch is inflation. Inflation erodes the value of paper money, making tangible assets like silver more attractive. Historically, silver has been seen as a strong hedge against inflation. When fiat currencies lose value due to rising inflation, the price of silver typically holds steady or even appreciates. In recent years, we've seen inflation rates rise globally, driven by various factors such as supply chain disruptions and increased government spending. This trend is likely to continue, further boosting the appeal of silver as a protective asset. Interest rates also play a significant role in the dynamics of silver prices. Central banks around the world, including the Federal Reserve in the United States, have a major influence on interest rates. When interest rates are low, the opportunity cost of holding non-interest-bearing assets like silver is reduced. This makes silver a more attractive investment compared to savings accounts or bonds. Currently, many central banks are maintaining low interest rates to stimulate economic recovery, which bodes well for the silver market. Another critical factor is the strength of the U.S. dollar. Silver prices generally have an inverse relationship with the value of the dollar. A strong dollar can suppress silver prices, while a weaker dollar can lead to higher silver prices. Given the ongoing economic uncertainties and geopolitical tensions, the dollar has experienced fluctuations, which in turn impacts silver prices. As investors seek to diversify their portfolios and protect their wealth, silver becomes an increasingly appealing option. Political and geopolitical stability also influence silver prices. Uncertainty or instability in major economies can drive investors towards safe haven assets. For instance, trade tensions, conflicts, or significant political changes can create volatility in financial markets. During such times, silver often benefits from increased demand as investors seek a stable store of value. Additionally, silver's role in green technologies and industrial applications ties it directly to global economic trends. As countries invest in renewable energy and advanced technologies, the demand for silver rises. This creates a unique scenario where silver is not only a financial hedge but also a crucial industrial metal, further solidifying its position in the market. Let's not forget about investment trends and market sentiment. Despite recent market crashes, there is a growing sentiment among both institutional and retail investors that silver is a stable and valuable asset. The consistent industrial demand, coupled with economic uncertainties, creates a robust case for silver. As more investors recognize silver's dual role as both an industrial and a financial asset, its market appeal is likely to increase. Before we proceed to the next point, I want to remind you to subscribe to our channel. Staying subscribed ensures you receive the latest updates and insights into the precious metals market, helping you make informed investment decisions. Now, let's explore how inflation and the strength of the dollar further impact silver's value.
Players that may have been asked politely to cash settle rather than stand for delivery. But there is no question, none, that the price of silver is being wickedly manipulated. And as I said earlier, 8 banks hold the largest concentrated short position in any commodity ever traded on COMEX. What the hell for? It's a tiny little market, and it's done for a reason. Yes, the real price of silver, no one has any idea what it truly is. And I don't think anyone has any clue how high this will go, but my feeling is higher than anyone thinks possible. Look, just right now, if you take gold at 24.62 and divide it by 42, that's the average price that we've seen for the past 100 years. Sorry, let me try that again. That is 24.62 divided by 31.30. That's $78.60. That's where it should be if you use the average price. Take the 24.62 and divide it by 7 when it's coming out of the ground at, that's $352. So silver should be way, 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 way higher. And I think before it's all said and done, as these nations, and India, to your point, is accumulating silver, over 700 million ounces they've bought in the past couple of years, and from the West, right? And that's 11 times, 12 times what the COMEX registered category has right now. If we believe the LBMA numbers, where they say they have 800 million, of which 300 million belong, or 500 belongs to the ETFs, 300 is available. Well, that's 2.5 times what.
Continuing our exploration of why silver is seen as a safe haven in today's economic landscape, let's focus on its role as a hedge against inflation. Inflation is one of the most insidious threats to the value of your investments. It erodes purchasing power, making every dollar you hold worth less over time. This is where silver comes into play as a powerful protective measure. Historically, silver has been a reliable hedge against inflation. When inflation rates rise, the value of fiat currencies typically declines. This decline pushes investors to seek out assets that can maintain their value in real terms. Precious metals, and silver in particular, have a long history of preserving wealth during inflationary periods. One of the reasons silver is so effective as an inflation hedge is its intrinsic value. Unlike paper currency, which can be printed at will by governments, the supply of silver is limited. This scarcity means that silver retains its value over time, even as the purchasing power of money falls. Moreover, silver's industrial demand adds another layer of protection. As we've discussed, The metal's applications in green technologies, electronics, and other sectors ensure that there is a constant demand for it, which helps to stabilize its value. In recent years, we've seen significant inflationary pressures building up across the globe. Factors such as supply chain disruptions, increased government spending, and monetary policies aimed at stimulating economic recovery have all contributed to rising inflation. For example, the inflation rate in the United States has reached levels not seen in decades, with prices for goods and services climbing steadily. This trend is mirrored in many other parts of the world. Silver's performance during inflationary periods has been well documented. In the 1970s, during a time of high inflation, silver prices surged dramatically. This pattern is not unique to that decade. Whenever inflationary fears rise, silver tends to follow suit. Investors flock to silver to safeguard their wealth, driving up its price. Moreover, silver is not just a hedge against inflation, but also against hyperinflation. In extreme cases, where inflation spirals out of control, the value of fiat currencies can collapse. Silver, along with gold, has historically been a refuge in such scenarios. Its tangible nature and universal acceptance as a store of value make it a go-to asset in times of severe economic distress. It's also important to consider the role of central banks and their monetary policies. Central banks often respond to inflation by adjusting interest rates. When they keep interest rates low to stimulate the economy, as we've seen in recent years, the real return on savings and bonds diminishes. This scenario makes precious metals more attractive. With interest rates expected to remain low for the foreseeable future, silver stands out as a compelling alternative to traditional savings. The relationship between inflation and silver is further reinforced by investor sentiment. As more investors recognize the risks posed by inflation, they are likely to increase their allocations to silver. This trend can create a self-reinforcing cycle where increased demand for silver drives up its price, attracting even more investors. To sum up, silver's ability to act as a hedge against inflation is a key reason why it is considered a safe haven asset. Its intrinsic value, industrial demand, and historical performance make it an effective tool for protecting wealth in an inflationary environment.
Zhou Futures, I'm sorry if I butchered that name. And Zhou Futures is, I believe, a proxy for the PBOC. And they are challenging like JP Morgan. They have massive long positions and they're making a fortune. Their stock price has doubled in the last year or less, and they are making a fortune by standing for delivery. And as the price goes higher, as of last week, they had 31,000 long positions in gold with a margin account of 21 billion yuan or 31 tons of gold, and massive long positions in silver as well. Silver is being drained by all of the exchanges around the globe by these very, very big players who are pushing back against what you just said. We just saw 5.71 million ounces in the first days of the August contract taken off of COMEX by a customer account called PTG, of relatively unknown who the hell they are. And then we saw the weekly inventory report off the Shanghai Gold Exchange showed that 215,355 kilograms of silver were taken last week off of the Shanghai Metals Exchange. That's 7.6 million ounces. That's the weight of 60 adult Africans.
As we continue to explore why silver is considered a safe haven in today's volatile economy, let's examine the relationship between silver prices and the strength of the U.S. dollar. Understanding this relationship is crucial for anyone looking to invest in silver or other precious metals. Historically, silver prices have had an inverse relationship with the value of the U.S. dollar. This means that when the dollar is strong, silver prices tend to fall, and when the dollar is weak, silver prices typically rise. This inverse relationship occurs because silver, like other commodities, is priced in dollars on the global market. Therefore, fluctuations in the dollar's value directly impact silver's price. One reason for this inverse relationship is purchasing power. When the dollar strengthens, It increases the purchasing power of those holding dollars, making it cheaper to buy silver. Conversely, when the dollar weakens, it takes more dollars to purchase the same amount of silver, driving up the price. This dynamic is particularly important in today's economic climate, where the value of the dollar is influenced by various factors, including monetary policy, trade balances, and geopolitical events. In recent years, the dollar has experienced significant fluctuations due to economic policies and global uncertainties. For instance, the Federal Reserve's monetary policies, including low interest rates and quantitative easing, have contributed to periods of dollar weakness. These policies are designed to stimulate economic growth by making borrowing cheaper and increasing the money supply. However, they also tend to devalue the dollar, making precious metals like silver more attractive as stores of value. Geopolitical events also play a crucial role in the dollar's strength. Trade tensions, political instability, and conflicts can all create uncertainty in global markets, leading investors to seek safe haven assets. During such times, the demand for silver often increases as investors look for stable investments that can preserve their wealth. For example, recent geopolitical tensions and trade disputes have led to periods of dollar weakness, which in turn have supported higher silver prices. Another important factor is the U.S. trade balance. A trade deficit, where the country imports more than it exports, can weaken the dollar because it increases the supply of dollars in the global market. On the other hand, a trade surplus can strengthen the dollar by increasing demand for it. Given the current global trade dynamics, with the U.S. often running substantial trade deficits, this can exert downward pressure on the dollar, making silver a more appealing investment. Moreover, the actions of other central banks around the world also impact the dollar's value. For example, when other countries engage in their own monetary easing or face economic challenges, their currencies may weaken relative to the dollar. However, if these countries start to recover or implement policies that strengthen their currencies, the dollar might weaken, benefiting silver prices. The global economic landscape is highly interconnected, and changes in one region can ripple across the world. For instance, economic slowdowns in major economies like China or the European Union can lead to shifts in currency values and trade flows, impacting the dollar and consequently silver prices. Investors need to keep a close eye on these factors to make informed decisions. The interplay between the dollar's strength and silver prices can create opportunities for savvy investors who understand the underlying dynamics. As economic uncertainties persist, many experts believe that the dollar may face continued pressure, making silver an attractive option for those seeking to hedge against currency fluctuations and preserve their wealth. In summary, the strength of the U.S. dollar is a significant determinant of silver prices. As the dollar fluctuates due to economic policies, geopolitical events, and trade balances, silver's value adjusts accordingly. This relationship underscores the importance of considering currency trends when investing in silver.
Metal taking delivery out of the ETFs for the authorized participants. But the drawdowns in the ETFs, the lack of investor demand in the West has been startling. And albeit it represents a very large proportion of those sales that we do. Now, don't get me wrong. Last year was our biggest year by far. Now, you take that out of the equation, we're still on pace to do better than every year except last year. And 2022, 2021, 2020 were huge years. It's not completely, totally been abandoned. And almost, every single order we do has in some capacity has silver in it. But it's nowhere near the allocation it should be. Rick Rule talks about it all the time. If you take the entire financial matrix from Joe and Jane six-pack to the Harvard Endowment Fund, that allocation is less than 0.5%. So yes, it's very small, but I will tell you that if something happens, a bank problem, commercial real estate leading to bank bailins, which most people don't even know is written into law, in the Dodd-Frank Act, because Silicon and Signature were bailed out illegally, as the subcommittee hearing with Janet Yellen and the Oklahoma senator paid homage to. But people don't know that if a bank fails, a big one, it won't be bailed out anymore. It will be bailed in. The amount of fear that would create. We added 14,000 clients in 45 days when Silicon Valley Bank and Signature Bank failed, and they were illegally bailed out. Evidently, it was an uber majority vote between the FOMC, the FDIC, Janet Yellen, and the president, because they were too systemic. But when asked, would this happen again, Janet said, not unless that same thing happens, where it's a majority uber vote by all of those parties involved. Otherwise, they will be bailed in. The other banks that have failed have been gobbled up, consolidated with JP Morgan and others. That won't go on forever. And you see a big bank fail and is bailed in, where everything over FDIC goes to bail in the bank. In other words, 250,000 or 500 if you're a couple, it's gone. And it goes to bail in.
As we delve deeper into the factors influencing silver prices, it's crucial to understand the significant role played by government and central bank policies. These policies can have profound impacts on the economic landscape, affecting everything from inflation rates to currency values, and ultimately the prices of precious metals like silver. Governments and central banks wield considerable power over the economy through their fiscal and monetary policies. Fiscal policies involve government spending and taxation decisions, while monetary policies are primarily concerned with controlling the money supply and interest rates. Both types of policies can significantly influence investor behavior and market trends. One of the most direct ways central banks impact silver prices is through their monetary policy decisions, particularly regarding interest rates. When central banks, such as the Federal Reserve in the United States, lower interest rates, it generally leads to a decrease in the attractiveness of holding savings and bonds. Lower interest rates reduce the returns on these safer investments, prompting investors to look for alternative assets that can offer better returns, such as silver. In recent years, we've seen a trend of historically low interest rates as central banks attempt to stimulate economic growth. This low-interest environment is beneficial for precious metals because it lowers the opportunity cost of holding non-yielding assets like silver. Investors are more likely to turn to silver to preserve their wealth and potentially benefit from its price appreciation. Quantitative easing is another significant monetary policy tool that central banks use to influence the economy. QE involves the central bank purchasing large amounts of government securities or other financial assets to inject liquidity into the economy. While this policy aims to spur economic activity by increasing the money supply, it also tends to devalue the currency, leading to higher inflation. As we discussed earlier, higher inflation makes silver more attractive as a hedge, driving up its demand and price. Government policies can also have a substantial impact. For example, fiscal stimulus packages, like those seen during the COVID-19 pandemic, involve massive government spending to support the economy. While these measures are crucial for economic recovery, they often lead to increased government debt and potential inflationary pressures. Investors aware of these dynamics may turn to silver as a safe haven to protect their wealth from the eroding effects of inflation. Geopolitical events and trade policies also play pivotal roles. Trade tensions, such as those between the United States and China, can create economic uncertainty and disrupt global supply chains. These disruptions can lead to volatility in currency markets and affect commodity prices. During such times, investors often seek refuge in stable assets like silver, pushing up its price. Moreover, central banks themselves are major players in the precious metals market. Many central banks hold significant reserves of gold and, to a lesser extent, silver. Their purchasing and selling activities can influence market prices. For instance, if a central bank decides to increase its silver reserves, it can lead to higher demand and thus higher prices. Conversely, selling off reserves can put downward pressure on prices. The interplay between government policies, central bank actions, and economic indicators creates a complex environment Where silver can act as a stabilizing asset, investors must pay close attention to policy announcements and geopolitical developments to understand their potential impacts on silver prices. In summary, government and central bank policies are critical drivers of silver prices. Decisions on interest rates, quantitative easing, fiscal spending, and trade policies all contribute to the economic backdrop against which silver is valued. As these policies evolve in response to changing economic conditions, they continue to shape the market dynamics for precious metals.
Of a ruse in the respect of what they're trying to tell us all the silver demand is coming from. I mean, look, if you look at the demand numbers, industrial 9%, electronic and electrical 9%, brazing, alloys, and solders 3%, other industrial 9%, jewelry 4%, silverware 7%, and photovoltaics, which are the panels, 20%. They're telling you it's by twice the biggest demand center for silver. Now, look, in China, we just saw a 5 gigawatt solar power plant come into commercial operation. It's the biggest in the world. So there is some demand certainly for it, and it's real. But I think, in essence, the real demand for silver is in high-tech aerospace, submarines, and high-tech weapons. If 500 ounces or a mint box of Silver Eagles in the tip of a Tomahawk cruise missile, how many have we fired in the past few years? How many have all of these countries in wars fired? How do you make them without it? So I think cratering the demand for silver ain't going to happen because it's disappearing in nature. It went from 16 to 1 to now 7 to 1. It's disappearing because all of the large, so much so that only 25 to 30% of all the silver mined last year came from companies like Heath Newmeyer's who mine silver, like First Majestic. That's 25 to 30% of 100%. So that means 75% came from other places. Why would that be? Majority comes from byproduct mining companies who are never looking for silver and just stumble across it as they're mining some other metal, some other asset. So it's so hard to find that there's only a handful of real silver companies because it's so hard to find. And so, no, I honestly, Jesse, I think that while it's a valid question, I think it's misdirection. And yeah, solar panels are real, and it does take certainly a certain amount of silver to do this. These new panels take twice the amount as the old ones. But yeah, I don't know to what degree solar will be powering the major cities, other than to say, you have the biggest one in the world that just went operational, taking over as the world's largest operating photovoltaic facility. So there is some truth in it, but to believe that is by a factor of 2, double, that's the largest demand source for silver. No, that's not. I don't believe that is. But I also don't think it will crater it. I just think there are too many uses for silver that are growing by the day that we're not really privy to. And so, no, I think it's the value of a generation.
So what are you seeing from the retail demand?
Let's turn our focus now to how investment trends and market sentiment are playing crucial roles in driving the demand for silver. Despite the recent market crashes and economic uncertainties, silver continues to attract a diverse range of investors looking for stability and growth opportunities. Investment trends in silver are shaped by a variety of factors, including economic conditions, market performance, and investor perceptions. One of the most significant trends in recent years has been the growing interest in silver as a safe haven asset. During times of economic uncertainty, investors often seek out assets that can provide security and preserve wealth. Silver, with its historical track record and intrinsic value, fits this role perfectly. Retail investors have been particularly active in the silver market. Platforms like Reddit's Wall Street Bets have seen a surge in discussions around silver, leading to increased buying activity. This grassroots movement, sometimes referred to as the silver squeeze, has brought new attention to the metal and highlighted its potential as a valuable investment. Retail investors, driven by a mix of financial strategy and a desire to challenge traditional market dynamics have contributed to significant spikes in silver demand. Institutional investors are also recognizing the benefits of adding silver to their portfolios. Hedge funds, mutual funds, and other large financial institutions have increased their allocations to silver, seeing it as a hedge against market volatility and economic downturns. These institutional investments provide substantial support to silver prices and signal confidence in silver's long-term prospects. Exchange-traded funds, ETFs, play a pivotal role in facilitating investment in silver. Silver ETF allow investors to gain exposure to silver prices without having to physically own the metal. The ease of trading ETF has made them popular among both retail and institutional investors. In recent years, we've seen substantial inflows into silver ETF, reflecting strong investor demand. For instance, the iShares Silver Trust, one of the largest silver ETF, has experienced significant growth, indicating a broad interest in silver investment. Market sentiment around silver is also influenced by broader economic trends and geopolitical events. As discussed earlier, factors such as inflation, currency fluctuations, and central bank policies can drive investors towards silver. During periods of economic instability or geopolitical tension, the demand for silver tends to increase as investors seek a reliable store of value. Furthermore, silver's dual role as both an industrial and investment metal enhances its appeal. Unlike gold, which is primarily an investment asset, silver's extensive use in various industries adds a layer of demand that is less influenced by market sentiment alone. This industrial demand provides a steady base of support for silver prices, making it an attractive option for long-term investors. The concept of silver as a poor man's gold also plays into investment trends. While gold is often out of reach for smaller investors due to its higher price, silver offers an affordable alternative. This accessibility has broadened silver's appeal, making it a go-to investment for those looking to diversify their portfolios without committing large sums of money. Another critical aspect of market sentiment is the perception of silver's potential for future appreciation. Many investors believe that silver is currently undervalued compared to gold, which has driven speculation that silver prices have significant room to rise. This belief is supported by historical data showing periods where silver has outperformed other assets, providing impressive returns to investors who timed their purchases well. Finally, the increasing use of silver in emerging technologies, such as renewable energy and electric vehicles, is contributing to a positive outlook for silver. As these industries grow, the demand for silver is expected to rise, potentially leading to higher prices. Investors who anticipate these trends are positioning themselves to benefit from silver's dual demand drivers. In conclusion, investment trends and market sentiment are critical factors driving the demand for silver. From retail investors participating in grassroots movements to institutional investors seeking portfolio diversification, the interest in silver is broad and deep. As economic uncertainties continue, silver's role as a safe haven and its potential for growth make it an attractive investment.
Fundamentals. The Silver Institute publishes numbers, and those numbers have showed a 250 million ounce or so shortfall in between supply and demand over the last few years each year. And so, in other words, there's more demanded than is coming to market. And when you look at the supply-demand numbers out of the Silver Institute, what they say is the demand is industrial, electric and electronics, of which photovoltaics, that's, solar panels, other industrial, photography, jewelry, silverware, and that's it. Now, I want to read you something, and I owe this to John Little of the Pickaxe. He's a hell of a researcher. He wrote a report a while ago in which he lists something and shows people can Google this. It was a hearing on October 14th, 1942, and it was a subcommittee of the Committee on Banking and Currency of the United States Senate. And it is S.2768, a bill to authorize the use of silver for war purposes of silver held or owned by the United States. S, as in Saturday, .2768. Read it for yourself. But I just want to read you the first two paragraphs, all right? And I want you to think about what is missing from the supply-demand fundamentals that we are told by the Silver Institute, showing us a 250 million ounce shortfall, right? Okay. This is dated October 14th, 1942, and you can find it when you Google it. I did. The present consumption of silver for war purposes is at the rate of about 100 million ounces per year and is growing rapidly. According to the War Production Board, it is only a matter of months before war demands will have increased sufficiently to require at least 200 million ounces of silver per year. Now, John Little does, about the massive amount of silver used in all this high-tech weaponry. I have a client who is a consultant for the Department of Defense, and 2 years ago in Vancouver at VRIC, I made a statement that there's 500 ounces in the tip of a Tomahawk cruise missile. And he came up to me and he said, I work for the DOD. I helped design the Patriot and the Tomahawk. I know there's silver in it, don't know how much. I'll get back to you. Never heard from him again. I see him this last year in January, and he says, I'll be damned, you were right. There is between 13 and 14 kilograms of silver in the tip of a Tomahawk. And he says, he shows me all sorts of pictures that he said were just that had been declassified and all sorts of stuff. But my point to you is this. In 1942, we were on the verge of using 200 million ounces of silver per year, and for military applications. And now we're supposed to believe that with all the high-tech weaponry, that there's no silver in it?
After exploring the various factors driving silver's demand and price, it's time to tie everything together and explain why silver stands out as the ultimate safe haven in today's volatile economy. Silver's unique combination of industrial and investment demand positions it as a robust asset in uncertain times. The industrial demand for silver, driven by its crucial role in green technologies, electronics, and other sectors, ensures a consistent base of support. As the world continues to invest in renewable energy and technological advancements, the demand for silver in these applications will only grow. This industrial backbone provides a level of stability that is not found in many other assets. Moreover, the persistent supply and demand imbalance further solidifies silver's appeal. With global mine production declining and recycling efforts unable to fill the gap, the structural deficit in the silver market is a significant indicator of its potential for price appreciation. This deficit is expected to widen in the coming years, creating upward pressure on prices as demand continues to outpace supply. Economic indicators strongly favor silver as well. In times of inflation, silver acts as a hedge, protecting wealth from the eroding effects of rising prices. The relationship between silver prices and the strength of the U.S. dollar also plays a critical role. As the dollar weakens, silver becomes more attractive to investors, driving up its price. Given the current economic policies and geopolitical uncertainties, the dollar is likely to face continued pressure, making silver an even more compelling investment. Government and central bank policies are pivotal in shaping the market environment for silver. Low interest rates and quantitative easing policies create a favorable backdrop for precious metals by reducing the opportunity cost of holding non-yielding assets like silver. Additionally, central banks' own activities in the precious metals market can influence prices, with increased purchases signaling strong support for silver. Investment trends and market sentiment are also crucial. The growing interest in silver from both retail and institutional investors highlights a broad recognition of its value. The rise of silver ETF and the grassroots movements that have brought new attention to the metal reflect a robust demand that supports its market price. Investors are increasingly seeing silver not just as a commodity, but as a strategic asset that can provide security and growth potential. To summarize, silver's multifaceted demand, persistent supply deficits, and favorable economic conditions make it a standout investment. Its role in essential industries ensures a steady demand, while its historical performance as a hedge against inflation and currency fluctuations offers protection in uncertain times. As government and central bank policies continue to create a supportive environment for precious metals, and as investment trends highlight silver's growing appeal, the metal is well positioned to maintain and even enhance its value. Silver's stability and potential for appreciation make it an ideal safe haven in today's economic climate. Whether you're a seasoned investor or new to the market, understanding these dynamics can help you make informed decisions that protect and grow your wealth. Thank you for joining us on this deep dive into why silver is the last safe asset standing. Don't forget to subscribe to our channel for more insights and updates on silver and other investment opportunities. And remember, while silver has a strong case as a safe haven, always do your own research and consult with financial advisors before making investment decisions. This is not financial advice, but a comprehensive look at the potential silver holds. Stay tuned for more content that helps you navigate the complex world of investments. Until next time, stay informed.